I'm Wendy Moran, an assurance partner at McGowen, Hurst, Clark & Smith. There is new revenue recognition accounting guidance that is effective for all non-public companies for years beginning after December 15, 2018. The new guidance requires a 5-step analysis of revenue and additional reporting disclosures. This video discusses Step 1, identify the contract with the customer. Contracts can be written, oral, or implied by customary business practices, but they must be enforceable. There are certain criteria that need to be met and documented in the form of a contract or purchase order, for example, in order to recognize revenue based on the new 5-step model. These criteria are: the parties to the contract have approved the contract either in writing or orally, the company can identify each party's rights, the company can identify the payment terms, the contract has commercial substance, and collectability of the consideration is probable. Now let's discuss combination of contracts under the new revenue recognition guidance. Contracts with the same customer should be combined and evaluated under the 5-step model together if the contracts are negotiated as a package with a single commercial objective, the amount of consideration to be paid in one contract is dependent on the other contract, or the goods or services promised in the contracts are of a single performance obligation. Contract modifications also need to be considered under the new revenue recognition standard. If there are instances where contracts with the customer are modified, companies need to determine whether the modification should be accounted for as a new contract or as part of the existing contract. Companies should treat the contract modification as a separate contract if there is an addition of promised goods or services that are distinct, or the price of the new contract obligation is consistent with the standalone price of the good or service transferred. Companies should adjust the current contract if the contract modification is not treated as a separate contract, including instances where there's a termination of the existing contract, adjusting the current contract and revising estimates, or a combination of both. I hope you found this video helpful as you begin to evaluate the first step of the new revenue recognition model. We will be posting additional videos on the other steps of revenue recognition. In addition, I encourage you to reach out to your accounting professional or us here at McGowen, Hurst, Clark & Smith for additional information or advice.